What do you think the kind of fallout will be from the financial markets here? Because, if there is no one to place the blame on for the halting of these stocks, like it's just the system that's broken. I think a lot of it comes down to the settlement process, the fact that these aren't digitally traded things. One thing that I've been thinking a lot about is short selling, the way that that's not disclosed the same way as long positions are. The fact that some brokerages allow naked short selling where you don't even have the stock and you're selling it, which can create where there's more shares short than even exist. So I've been thinking a lot about, what is the market infrastructure take away from this moment, and how can we improve as a market where all participants, don't have to go through this again?
Yeah, I mean, I could see that there would be an array of consequences from this moment, and I kind of divide them up into a couple of different things. So you had a couple of things happen that truly were unprecedented, I think, and that are more novel, right? And I think specifically with regards to the high amount of concentration into individual stocks, and I think that maybe will take a little bit longer time to digest. But actually, then on the payment for order flow thing, that's not really novel. Like there's a new spotlight on it right now because it brings things into question. But like you did a video about this 3 years ago, right? And I think the bigger problem there that we felt at least is where you really start to make money on payment for order flow is when you have things like options trading and margin trading. And so those are things that public don't offer because they don't really fit currently within the ethos of like having people be longer term investors necessarily.
I love that.
And so if you're really banking on PFOF as your main source of revenue, then you are truly incentivized to build these higher risk, kind of more day trader type tools. And that was not what public ever was really about, right? To your point, we built instead things like fractional investing, the long-term portfolio feature, et cetera.
And this is to me the part that, incentives are the only thing that matters. So if your business model is saying you're going to generate more revenue from users when they do options, your incentive is to push them to options. And the flip side, or margin, the flip side of that is if you're offering a SaaS margin component and say, okay, $10 a month, $20 a month for access to margin, that's a psychological thing of like, well, I'm paying for it, I might as well use it. So then you're also incentivizing users to use margin, which I would say is to the benefit of your business model. So there's lots of skewed incentives. And so I think, and that's almost the question I have for all of these brokerages. It feels like the Facebook model of, dude, we got 1 billion users, we're not making any money, who cares? It's going to still be worth everything. That's still the mentality that so many startups have, that all these brokerages have, is like, we don't really have a revenue model, but we have all these users. So I feel like eventually there has to be some moment where you kind of crack the code on incentive alignment and engagement on the public platform. So I'm kind of curious if you have anything you could tell us or like features that are coming up, or how you think about that kind of incentive alignment.
Yeah. Just before we go there, let me double click on the other stuff, because I think what's kind of fascinating, and I started looking a little bit at this, is, I think what was called the Dutch East India Trading Company was the first company to ever go public around 400 years ago. And what happened there is the beautifully simple transaction of, they wanted to raise capital for private investors that wanted an upside in that company. And the money that were invested there went straight to fuel, their mission onwards in the world, right? And then that is really, I think, the main intent that the stock market was designed for. That's at least my personal take on it, that I can invest in companies, that money helps support the company. Ultimately, if you follow the trail, that leads to job creation for that company, et cetera, and you're supporting that company on this journey. In exchange, you're taking part of the upside, you're becoming a shareholder in that company.
Like literally investing. It feels like we forgot what that was. Like
Exactly, right? And then somewhere in the last 400 years, it turned into, all these derivatives on top of where the company is now the underlying asset, and options trading is just one form of that, but there's kind of many others. There's a bunch of institutional players, and up until a couple of years ago, less than 10% of the volume in the US market was retail volume. Now it's kind of grown for 20, some people are now saying 30% as of this moment right now. So obviously that's changing. And I think that change is really what we're very focused on with public, of we're more focused can we bring it back to something that is more similar to the original purpose that the stock market was designed for? of like just giving retail investors access and giving them sort of an approachable way to invest and become owners in the companies that they care about the most and that they think are going to do well in the future, because we think that exchange is one of the most sort of beautiful concepts that have been invented in the history of mankind. And so therefore we haven't really focused on, other derivatives and things of that nature. And it's also like from that lens, it made more sense for us to just like route orders to the exchanges. We feel like it's the cleaner thing to do, for lack of better wording. And then people, it'll be up to the people how much they want to tip. They don't have to tip anything, but we're seeing that a bunch of people are, because nobody really said like I absolutely have to. And I think what we're seeing right now is a lot of the way people have embraced this kind of tipping feature is like a lot of people, they don't need like they're happy to tip, right? Like it sort of commissions went from 10.7 to like 0, but like I think if you tip half a cent or $1 or 10 cents, right? Like that's probably not gonna break the bank for you, especially in events where you're closing out a position potentially and you made some money, right? And so I feel like that's, for us, was just like a cleaner way to do it that more resembles the original intent the stock market was designed for in the first place.